You're a long-term investor. Everybody knows that.
Yep.
But at the same time, even a long-term investor doesn't want to commit capital at stupid valuations. Tell me how you see the world today and whether and what asset prices say about that.
Yeah. Erik, I think we live in this really interesting paradoxical time. Very paradoxical. On the one hand, we've got the economy and we've got markets. And on the other hand, we have politics. In terms of economics and the market, things look pretty good, to be honest. Growth is synchronous across the world. Rates are moving up, but they're still pretty low. Business investment is stepping up. Earnings are good. Wages finally are beginning to come up, and that's important. So for all of those reasons, you look at that and you go, this is a pretty good outcome, and this is a pretty good situation that we find ourselves in. Now, the question, of course, is how long can this Goldilocks situation continue? And I think that's an important question. In the face of that, we're cautious as to how long this can continue. But the economic fundamentals are there, and that causes us, from a market point of view, yes, to think that valuations are high, but if you're selective, there are interesting opportunities still out there. Now, the other side of the ledger, politics. Mm-hmm. There, I think there are some really significant issues. One, everything that's going on in the world of trade, which I think is a big overhang and represents a risk. Two, all the issues about the distribution of the benefits of trade, inequality, what governments are going to do or not do about those things. I think those are major issues, and also potential overhang on the markets. These are big, big issues. So from my point of view, in terms of thinking about economics in the market, what you really need to keep your eye on is politics, and you need to keep your head up. This is not a time to be complacent. This is not a time to be overconfident. This is a time to be vigilant about what's going on in governments.
Trade. Let's talk about NAFTA then. The Canadian economy is doing quite nicely.
Very well.
What happens to the Canadian economy if they don't reach a deal on NAFTA?
Well, look, I think the updating and renewal of NAFTA is in everyone's interest.
Yeah.
It's in the interest of Canada, the United States, and Mexico for a variety of reasons. There's a lot of jobs, et cetera. Now, all that being said, let me make a few points. First, these economies are fundamentally integrated now. And a protectionist impulse on one side of the border or the other is not something that's going to disintegrate these economies. They are integrated. That is an economic fact, number one. Number two, when NAFTA was done, it was done 25 years ago. It was structured as a jobs and growth plan for a different kind of economy than the one we have today, because the Canadian economy today has so many other sources of growth and job creation and entrepreneurship and new industries that have grown up over time. So NAFTA is important, and we should certainly work toward its renewal. But it's not what it was 25 years ago in terms of its core value.
So we shouldn't care about it as much?
No, I'm saying it's important and we need to get it done. But let me make one other point. And supposing we didn't, for some reason we didn't get it done, and I think that would be unfortunate, but supposing we didn't, well, we fell back to the WTO tariffs. They're on average about 2%. Is that going to cause these economies to disintegrate across the three of them? I don't think so. So all that says to me that Canada should continue doing what we're doing, which is negotiating from a position of strength, because I think that's the position that we have, because we've got to get the right deal. Not just any deal. We've got to get a deal that's going to be good for the next 20 years. And if that takes some time, and that takes some patience, and indeed if that involves the United States at one point saying, well, we want to move on to something else, well, so be it. The Canadian economy is strong, as you say. We can withstand some uncertainty. What matters is taking our time to get the right deal.
Michael, I want to ask you a question that confronts every institution like yours. There's a flood of liquidity in the world today, and ever more coming from other sovereign or quasi-sovereign institutions, particularly from the Far East. How do you compete with all that, call it cheap capital?
Well, that's a good question, and we think about that a lot. Because in a way, capital is the paradigmatic commodity. So what do you do when you're facing a situation where what you do is a commodity? Well, I think what you do is differentiate yourself. And that's what we're trying to do. We're trying to be a different kind of an investor. So what does that mean? That means we need to focus on, some of our core principles is always focus on the real economy, invest in the real economy. And critically important, when you invest, think like a builder. As an investor, we need to help and contribute to building the real economy, because then in the long term, that's what's going to be good for us. You need to think about building the real economy, not taking things from the real economy. And that building is really important. So that's what we're trying to do, and that's what we do in our real estate business and our infrastructure business, when we work with companies to help them expand globally, when we help them do M&A. It's about thinking like a builder and being a good partner. That's how we try to differentiate ourselves.